All right, good Monday evening. It is January 8th, 2024. Investors and traders around the world, our Finom group, investors and traders, welcome to the new year. It hasn't been so welcoming unless you count today. We had a big rally in the markets, but either way, welcome to the new year. Now, oftentimes we hear that just because the calendar changes, that doesn't mean the market's trend changes, and that couldn't be as far away from the truth as you could possibly think. The reality is that more often than not, the trend does change when the calendar year changes. There's a reason why we have the January barometer. I mean, so I see when people say this, and I've proven it in the past. I've listed by calendar year when the trend changes, and it is often within the first couple of weeks of a new calendar year. Now, more often than not, that trend changes mainly like 80% of the time, it's from bearish to bullish. When the market is already bullish, it's just less bullish, the trend, as the calendar year changes. So just a heads up there, there is a reason why we have the January barometer. And speaking of the January barometer, as well as how we've kicked off this new year with a failed Santa Claus rally, and some of you know what that forebodes, or what that can forebode, I should tell, in the way of the full year S&P 500 returns. But before we get to that, and again, welcome to the new year, everybody. Welcome to Finom Group. And we're going to dig into a couple of key points that we outlined in our macro market research report over the weekend to Finom Group members. And our report goes out Sundays, and it only goes out to our contributor and our premium members. If you are not a contributor member or a premium member, get your subscription ASAP. The prices go up Friday. Contributor membership will be $18.99. Premium membership will be $69.99 Friday. Get it now, lock it in. It won't ever change from there. With that being said, now, late last year, there was the potential for a golden bull to signal. What is a golden bull? And I had been, kind of hinting at this publicly in my personal X feed, formerly known as Twitter, but it largely went under the radar. Now, when it did trigger, I fully announced it to Finom Group members. So for the first time, you'll get the explanation of what the golden bull is. And it is a very, very rare signal, folks. As you can see here, the data, it has only triggered prior to 2023's trigger. It has only signaled 1, 2, 3, 4, 5, 6 previous times since 1971. The first trigger was actually 1975. You say 1975, why did you only go back that far? Because that was the introduction of the NASDAQ. So we went back to 1971. The first actual signal was in 1975. Now, it's a proprietary composite signal. It takes together, or it combines, a Wig Breath Thrust and a DeGraff thrust. So it takes those two breath thrusts, and it adds the summation index getting above 900, the McClellan summation index getting above 900. For those of you who know what the summation index, you understand that is one of the broadest measures of market breadth momentum. And we had the number of stocks in the S&P 500 trading above their 50-day moving average get to at least 90%. So again, you take all these different breadth measures, if you will, of strength and thrust, and it has only triggered in unison. All of these have triggered in the calendar year 6 times before the 7th time in 2023. The forward returns in the following or what we did was we take the 30 days in between the second to last signal and the last signal and calculate the forward 12-month returns. 1975, 34% after the final signal. Because sometimes the summation index will trigger first. Other times you'll get his Wig Breath Thrust first, or stocks trading 90% of stocks trading above their 50-day moving average. So we take the average of 30 days between the final two components within the signal, and calculate forward 12 months. So that was 34% from the final component triggering in 1975, 1982. 2004 was the weakest, forward 12-month returns. 2009, 2013, 2019. So the average return after a golden bull signals or fires is 27.2%. You're more than welcome to do the median return if you so like. Either way, it has a 100% positivity rate, obviously, once this signals. And some of you also recognize that this is year 2 of a new bull market, and that is also something that we talked about in our weekend research report. Again, if you want this data, folks, sign up before the prices go up. With that being said, here's the data. Again, it's year 2 of a bull market, calendar year 2 of a bull market. And historically, year 2 has never been red. You've always had a positive return, and here is the data. So I'm going to blow this up a little bit here. Bull market year 1, bull market year 2. This chart here is from LPL Research, giving credit where credit is due. It goes all the way back to 1949. I don't care about anything before 1957 because the S&P 500 was created in 1957. If you want to go back, that much further, you got different, composition of the indexes. I don't know how valuable that kind of data is to you. Nonetheless, new bull market, 1957, year 1, year 2, a lesser return. And you'll see that is pretty standard. Year 2 has a lesser annual return than year 1. Nonetheless, they are all positive, and the average return in year 2 is 12%. So you've got two things, a double-digit potential return and a 100% positivity rate. But here's the thing that has me concerned. When you get really good at quantitative analysis, and that's what we're doing here, quantitative data, whether it's the golden bull that just signaled, or looking at a year 2 of a new bull market, this is all quantitative data. And when you get good at studying and knowing what to look for what particular calendar year you're in, or what particular cycle you're in, you'll start to look for other ways to cross-reference data. Right. And so here's what I did this week, and just here today, actually, because, or in lieu of the fact that we had a failed Santa Claus rally. And while a failed Santa Claus rally in and of itself is not a bearish signal, when I cross-referenced it with year 2 of a new bull market going back to 1969, right, this is from the Trader's Almanac. Bears may come to Broad and Wall if the Santa Claus rally doesn't show up. So I wanted to look at all the failed Santa Claus rallies, and the date only goes back to 1969. And for those of you not familiar with the Santa Claus rally period, that's the final 5 trading days of a calendar year and the first 2 trading days of the new calendar year. And the S&P 500 delivered a negative return in that period this time around. So they say if Santa Claus should fail to call, bears may come to Broad and Wall. Santa Claus rally, a failed Santa Claus rally, I should say, is kind of rare. In fact, going back to 1969, the first one did not occur until 1976, I believe, 1977. So what I did, right, because this is year 2 of a new bull market, and historically, year 2 has never delivered a negative return. But what if we had a failed Santa Claus rally? Sadly enough, what I discovered today was that it's never happened before. We've never had year 2 of a bull market combined with a failed Santa Claus rally. This is the first time. So what does that mean for S&P 500 returns going forward, right? If the S&P 500 in year 2 of a new bull market is still going to be positive, it will do so for the first time in history, or first time going back to 1969, with a failed Santa Claus rally. That doesn't make me warm and fuzzy. That doesn't give me bullish feelings, right? There's a first time for everything. We know that last year. I'm sorry, 2022, right? Some of you may know the 50% rule. When the S&P 500 has bounced, from a bear market, when it has retraced 50% of the decline, 50% of the bear market decline, when it retraces to the upside, 50% of that, historically, the market has always kept going higher. It never made a lower low after retracing 50% of a bear market until 2022. And again, this goes all the way back to 1957. So that was a first time for that particular circumstance. Here we have another first time circumstance where year 2 of a new bull market, we have a failed Santa Claus rally. Now, will that completely offset, the positive vibes coming into the year? The year 2 that never has delivered a negative return in bull market? We don't know. Time will tell. I hate saying that. That's one of my pet peeves. Time will tell. That's not an answer, right? But that is the circumstance that we seem to be in. Now, we still have a couple other things to monitor here in the month of January, like the first 5 trading days of January. And typically, those are bullish as well. You tend to have more positive starts to the year than you do negative. Unfortunately, even with today's rally, we are some 6 points below where we started the first 5 days of the new calendar year. So tomorrow, and I'll show you exactly where we need to get to. We've got to get to or above 47.69. Thankfully, right? Thankfully, you're thinking we had a huge rally today to make tomorrow extremely possible, right? And I'm going to throw some cold water on even that. Don't get me wrong. I'm still bullish, folks. But we look at data because we're trying to be objective. We're trying to be unbiased, right? And the data today with this big rally here, there's something called the ARMS index or the tick, the NYSE tick. And when that goes above 1,000, just think about how relentless today's rally was. Essentially, every tick, every tick down was met with 2 tick ups. So you had basically the markets finishing at the high of the day. Well, typically, when the tick is above 1,000, the next day returns are negative. It's not 100% of the time, but it is about 70% of the time. And when the market is up that other 30% of the time, it's very modest gains. Thankfully, all we need is a modest gain to make the first 5 days of the new calendar year positive. So we'll see what happens. I'm just giving you the facts, folks. All right, let's move on. So we know we've got some hurdles here. We've got the possibility of a first time ever circumstance to deal with as well. You may have seen Tom Lee on CNBC just the other day, not as upbeat as he had been coming into the year, given we've had a failed Santa Claus rally. It is what it is, folks. So here's the other thing. We talked about cross-referencing data, which is what I just did. I used year 2 of the bull market data and cross-referenced it with, or to find if there was any other failed Santa Claus rallies, and there was none. Here's another thing I want you to consider, or another cross-reference, if you will. Did we come into the year? Because we just had a very rare signal, right? This is all about breadth. Was breadth that strong that it'll offset the failed Santa Claus rally? Now, again, we don't know. These are questions, considerations, if you will. So I looked at this Wig Breath Thrust. Let's go to the latest Wig Breath Thrust that we had in November. Here it is. Now, most of you know Wig Breath Thrust is also very rare. Going back to 1950, I use 1958 because the creation of the S&P 500, 1975, nonetheless. But forward 6 and 12-month returns have a 100% positivity rate. Cross-reference. How many of these Wig Breath Thrusts happened in year 2 of a new bull market? Well, let's see. Let's go back to our, here we are. 1962, so 1963, we're looking for 1963, 1967, 1971, and 1975 to start us out. Now, 1962, did I say 62? Sorry. No, we're looking for 63, 67, 71. 63, 67, there's 71. So yes, we have one signal in a year 2 of a new bull market. 75, yes. We have another signal, 82, 84. I already know those dates because the new bull market I recall from 1982. In fact, this bull market looks almost identical to 1982's into 1983, which just kept going higher. But indeed, 1983 was 1983 was year 2. We're also looking for 1988 year 2. So 83 and 88. Nope, that's not on there. 88 is not on there. So those 2 years did not have his Wig Breath Thrust. Fast forward, so we're looking for 91 and 2003, year 2s. 91's not on there, 2003 is not on there. So we've got 4 years that were year 2, but no Wig Breath Thrust. So indeed, maybe this Wig Breath Thrust, maybe the whole of the golden bull trigger is enough to compensate for a failed Santa Claus rally. Again, just thinking about ways that we can cross-reference the data to get a better probability of what's going to happen the remainder of the year. You following me? Again, quantitative analysis is not always easy, but the more that you study it, the better you become. It's just like anything else. Perfection takes time. I'm not perfect at quantitative analysis, even in I've only been doing it 6, 7 years now. At Finom Group, treasure trove of data to look at your fingertips. Subscribe. You can pull it up anytime. Use our search engine, type in the keywords. With that, let's move on to another portion of the golden bull is the summation index. And we talked a goodly amount about that recently with Finom Group members. I'm trying to see in here. I think we have, yes. All right. A McClellan oscillator, we talked about that. Whether it's the NASDAQ, the S&P's McClellan oscillator. But here's the summation index. Now, I had tweeted this out also, or posted it. What's the date? January 3rd. Why? Because we saw the summation index. And again, this is one of your broadest measures of market breadth momentum, which is why it's a component in the golden bull signal. We got down to negative 800, terrible breadth in late or Q3 of 2023, right? We had a protracted correction of 10% in the S&P 500, 14% in, in the NASDAQ. And then we cycled all the way up to 1,000. That is a complete reversal of the trend in breadth. And it was a complete reversal in the price action in the market. Now, historically, when it drops down to 800 and cycles back up to 1,000, the 12-month forward S&P 500 returns have never been negative. Never. Again, this is why it's it's one of the components in the golden bull. And that just happened, folks, at the very end of the year. The summation index got all the way above 1,000. Now, here's the other thing about all that breath momentum that I want you to consider, right? It's one thing to know the probabilities over the next 6 and 12-month period, right? 100% of the time, the market has delivered a positive return after this signal. It's one thing to know that, but what about the drawdowns, right? Because it's not going to be a straight path to the upside, right? More often than not, that's not how the market works. So let's look at this here. And this is the signal. Let's see. This is from the sentiment trader. The risk reward table shows some of the most skewed results we've ever seen. No signal suffered more than a 6.8% drawdown at any point within the following year, yet every signal enjoyed a double-digit gain at some point over that 12-month period. Here was the largest drawdown, maximum drawdown over the 12 months after the signal, after you cycle from negative 850 to 1,000 on the summation index. The biggest drawdown was 6.8%, and that was in 1988. It's pretty compelling, isn't it, folks? So this gives you the ability to set up, possible buy orders. Let's just broaden it out to establishing a game plan. Establishing a game plan. One last point before we call it a day. And again, thank you for joining us here at Finom Group for our inaugural YouTube video here to the public in 2024. One last thing. The S&P 500 got within, and is right now within 1% of its all-time high for the first time on December 18th of 2023. It was within 1% of the all-time high. Now, historically, when the S&P 500 gets that close to the all-time high, the mean amount of time that it takes to actually make a new all-time high is 11 days. The longest it's ever taken was 20 days. Again, that trigger was on December 18th. Well, we've already passed 11 trading days. What's up next? Maybe it takes 20 days. Maybe this will be the longest time, it takes in history. The bigger picture, we always make the new all-time high. All 11 times this has happened, we've made a new all-time high. That's the big picture. Now you know what you can do on drawdowns. You know the probabilities of the maximum drawdown. You know the probabilities over the next 12 months. And you know also, this time may be different. Failed Santa Claus rally in a year or two of a new bull market. Again, come join us at Finom Group. Subscribe today. Prices are going up on Friday, folks. Have a fantastic year. Subscribe to our YouTube channel. Subscribe to our website. Have a fantastic year, everybody. We'll see you next time.